So Elon Musk posted this back in 2020 asking, what can't we predict? And Nathaniel Rothschild said the price of XRP after it gets backed by gold or will be a part of the SDR. And so you can tag Grok on Twitter and say Grok and then ask it a question. So I asked it, who is Nathaniel Rothschild for everyone to know? And Grok said, he's the 5th Baron Rothschild, born in 1971. He's a British financier, inherited the Rothschild banking family title after his father Jacob's death in 2024, known for his role in global finance. He's tied to the famous Rothschild dynasty. And if we just ask Grok, who are the Rothschilds and what's their net worth? Well, they are the wealthiest Jewish family originating from Frankfurt, Germany, whose documented history goes back to the 16th century, guys. So if one of the Rothschilds is saying XRP is going to get backed by gold or will be a part of the SDR, and the Rothschild family is the wealthiest Jewish family in the world, the Jews run the world, they established a banking business back in the 1760s, and Mayer Amschel managed to pass his wealth to his 5 sons, who set up banking operations in major European cities, Frankfurt, London, Paris, Vienna, and Naples, that created one of the first international banking networks in the world. And this grew significantly during the 19th century, where the Rothschilds were believed to possess the largest private fortune in the world, guys. So I don't know, you tell me, why would one of the Rothschilds be saying this in response to Elon Musk if he didn't know something? Listen to what Jerome Powell had to say about Trump's tariff remarks during his recent speech at the University of Chicago.
We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. Uncertainty around the changes and their likely effects remains high. Policy is not on a preset course. If the economy remains strong but inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our mandate.
So to summarize his entire speech, he talked about conventional view on price spikes. If tariffs cause one-time spikes in prices, the Fed won't typically react with policy changes or interest rate adjustments, as it would reduce unemployment and economic activity unnecessarily. The Fed would look through such temporary effects. Number 2, uncertainty around tariffs are still unclear, and the effects on importers, retailers, and consumers will only become evident over time, because this just doesn't play out over a 24-hour period. This needs to be signed into effect, and then it takes a long period of time to take place. So the price action on the charts is not based on the actual event, it's just based on the words. So think of the markets like an overly emotional teenager that react to their parents saying you need to clean their room. So number 3, when tariffs might matter, the Fed would pay closer attention if tariffs lead to persistent inflation, larger than expected price increases, or shifts in long-term inflation expectations, because their goal has been to return to the Fed's 2% target after a period of high inflation that we saw back in 2021, 2022. And number 4, broader economic outlook, because tariffs are just one part of the economic picture. Other factors like growth and policies, like tax cuts, immigration changes, regulatory shifts under Trump, are also going to massively influence the Fed's decision to adjust interest rates. And number 5, gradualism. While uncertainty is high, Powell favors cautious, gradual approach to policy changes. So it's going to be in response to inflation and unemployment as a part of their dual mandate. So if we look over the past year for United States inflation, we can see since September 2024, inflation has risen from 2.4% to 3% in January. And February's numbers should be coming out here soon. So if inflation continues to tick up, they might keep interest rates higher for longer. Now, one thing that's important to know is if we look over the past 5 years, you guys can see back in 2020, right into 2021, inflation started to spike from 1.7 to 2.6. And then by April, it was at 4.2, 5%. And it got all the way up to 9.1% by June of 2022. So if I bring up the chart for you guys right here, you can see after COVID, when inflation was all the way down here, very, very low, it rose after that alongside the bull market. It wasn't until the bull market peaked out inflation continued to the upside, well, then the market started to sell off. And it wasn't until like June that inflation dropped while the market was almost virtually at a bottom. So while inflation goes up, that's actually shown that it's been good for the crypto bull market as we look at last bull market cycle. So where's inflation right now? Well, inflation is relatively low at just 3% compared to what it was back here by April of 2021 at 4.2%. So if inflation starts to tick back up again, in my opinion, that would be good news for the crypto market because inflation gets higher, cost of goods and services and grocery stores go up. If the tariff war continues, then where do you think the wealthy are going to start moving their money? And even average everyday Americans, they're going to start to realize that the only way to beat high inflation is to invest. Where are they going to invest? Well, they're going to invest in the asset class of the future, which is the crypto market. Look at what Trump has been doing recently. I mean, he just hosted a crypto summit at the freaking White House, guys. So the net verdict here is in the short term, it's probably neutral to bad, obviously, because of the uncertainty that this creates, but the diminishing returns or the diminishing effect of the sell-offs as the market's already priced it in. In crypto, I think that's just going to get less and less and less as people get numb to the tariff news. But the bad news is this causes higher costs for mining hardware and an economic drag that could outweigh any flight to safety bump. And everyday consumers are going to have to spend more on these goods and services. In the long term, though, it could be potentially good if tariffs erode trust in fiat currency, the US dollar, or disrupt global finance enough. Crypto's appeal as an alternative would grow. So it's a mixed bag, honestly, right now. Crypto is too detached from physical trade to field tariffs directly, other than just the words that are spoken, but it's not immune to the economic chaos that can be unleashed.